World's currency markets have been in action over the last few months and largely behind the scenes. With the US escalating trade war severely, roiling the bond markets and the Treasury markets, and with China having been a significant net seller of US government bonds in recent years, accusations have abounded that the Asian superpower has been recently dumping vast quantities of Treasury securities in retaliation for Donald Trump's aggressive measures. Hello, my name is Abhinav Trivedi and you're watching Mint Explains. With the recent trade hostilities of recent weeks raising fears of far more uncertainty, the larger picture though is still unclear. On one hand, ladies and gentlemen, foreign holdings of US Treasuries rose to an all-time peak in July. This was significantly shown in the data from the Treasury Department. This holding has hit record high for the third straight month, led by gains in holdings from Japan and the United Kingdom. Sample this. Holdings of US Treasuries surged to $9.159 trillion in July, up from $9.126 trillion the previous month. Compared with a year earlier, Treasuries owned by foreigners were up nearly 9%. Now let's come to China. China's holdings of Treasuries have dropped to $730.7 billion, its lowest since December of 2008, when the world's second largest economy held approximately $727 billion. Now, the country's reduction of its US Treasury holdings has been a very gradual process over the last 1 decade, largely driven by both strategic and market factors. Strategically though, ladies and gentlemen, China has been seeking to reduce reliance on the US dollar in reserves, trade settlement and investment. Simultaneously, China has been gradually unloading treasuries to bolster its own currency, the Yuan. Analysts have said that a slowing Chinese economy, post-COVID challenges and trade barriers have diminished China's inflows from exports. Now, although there is perhaps insufficient evidence to point to China as being responsible for the recent bond market sell-off, some fear that its still substantial holdings of US Treasury securities could be sold in vast quantities in the future to push back against Trump's continued trade aggression. With the recent 100% tariff announcement by Donald Trump and China's swift response over rare earth minerals, possibility of larger dump behind the scenes cannot be ignored. On the other hand, there is a larger context: rising US debt, stable coin, and the dollar's strength. Rising US debt and dollar strength has been a focal area for BRICS members' nations meeting. As of now, challenging dollar's hegemony is a humongous task. Dollar as an international currency of trade is not going anywhere soon, but attempts are being made by the second largest economy of the world to replace it. Recently, China restructured its debt to Zambia. Another African country, Kenya, recently swapped $3.5 billion in Chinese railway debt from dollars to yuan. Now, Kenya has converted its US dollar denominated railway loans from China into the Chinese yuan, not only securing debt relief but also fitting into Beijing's long-term goal of internationalizing its currency. Analysts said the decision announced by Kenya last week paved the way for other debt-stressed African countries and could ultimately draw them closer to China. Through Treasury securities or its own debt deals, China has been making slow moves to counter dollar's hegemony. Time will tell how potent they are. This is Abhinav Trivedi signing off on behalf of Mint.